This is Fintech Takes, the podcast keeping you in the loop on all the latest fintech trends, news, and ideas. I'm Alex Johnson, creator of the Fintech Takes newsletter, your host and self-confessed fintech nerd. Let's go! Hello, and welcome back to the Fintech Takes podcast. Today, I have an incredibly special episode built around a very special guest, a fintech friend of mine and someone who is, I think, very well known in the space and well respected. He was formerly in charge of fintech and crypto go-to-market at Visa. Prior to that, he founded a company that OGs in the space will know very well, TrialPay. Today, he's working on a number of different fintech ventures, the wise and powerful Terry Angelos. Terry, thank you for joining me.
Thanks, Alex. What a wonderful and warm intro. You certainly know how to get your guests excited to talk with you.
Well, that's my specialty because I need to lean on you for all of the smart content. So thank you very much for joining me. I was thinking it's kind of funny, but this is the first time you've been on the podcast, despite the fact that I think you and I met, or at least first started talking via like Clubhouse chats that we were doing during the pandemic. So this is kind of an interesting full circle moment for us, but I really appreciate you coming on.
Yeah, great to be here, and we'll see if any wisdom comes out of this particular session.
Well, I'm sure that it will. The trigger for me wanting you to come on the podcast was an announcement that Visa made about a month ago. And it was one of those things that was kind of funny because it was all contained in a single press release. And in this one press release were about 19 really interesting things. And as is always the case, obviously fintech moves fast. We have a lot of stuff to talk about. You're incredibly busy with all these different projects that you're working on now. And so I don't think we were able to give it quite the level of time and attention that it deserves. But I was hoping to dig into some of those announcements, get your perspective on kind of what those are and what they mean, and just try to break those down in a little bit more detail. Obviously, you're not going to be speaking for Visa today since you no longer work there, but given your background, I figured you'd have a good perspective on those topics. That sound good?
Yeah, that sounds great.
Okay, go ahead.
Yeah, and actually, one of the reasons why I'm interested in this is, one of the roles that I play is an advisor and board member at a company called VGS. VGS is a tokenization and vaulting framework for some of the largest merchants in the US and globally. And so we're very focused on how credentials are created, tokenized. And so when these announcements came up, we were very interested to understand more about how they would impact the ecosystem. And so I must say, I give a lot of credit to Visa and the networks for announcing something that some of it is on the horizon. And the reason why we sort of say that is, remember, Visa is just the network, and there's a whole ecosystem of issuer processes, acquirer processes, merchant banks, issuing banks that really have to build on top of these announcements in order for consumers to kind of see the end state. And so that's why I think you'll see some of the products kind of live in one market or with one issuer, because it just kind of takes time for that to filter through the ecosystem. The thing that stood out for me, and this was something that I was involved in a little bit when I was at Visa, was the Flex Credential. So there was a couple of big announcements. There was the Flex Credential, there was the tap for everything, there was Passkeys, there was account to account, and then data token. I think those were the key announcements. Why don't we start with Flex Credential?
I'd love to. Yeah. Let's start there. What is Flex Credential? You had a great tweet on this, but for those who didn't see it, walk us through what it is and kind of the mechanics of how it works.
So first, a reminder, I think of the networks more as authorization networks than payment networks. And why do I say that? Because when you tap that card at a retailer you're traveling to Germany and you tap your card, you've really entered into a legal agreement, ostensibly between the consumer and the merchant, but really intermediated by the banks and the network. And that transaction is guaranteed, even if the consumer doesn't pay, even if the issuing bank fails. At the end of the day, Visa is responsible for that payment to the merchant via the merchant bank. And so really it's about authorizing that transaction. Payment happens later, and there's lots of ways that the payment happens and the money moves from the various banks. So if you think about authorizing a transaction, well, today, when you are given a credential, it comes in a certain type. This is legally my Visa debit card, which, by the way, has different rules, different interchange than my Visa credit card or my signature card or my Durbin debit card. And that has impacts in the way that merchants pay for the transactions. It has some impacts in terms of the rewards that the customer gets. And so you kind of have this very fixed product, which I think made sense when we had physical cards and a mag stripe, and then we had the chip. But now you're getting, different types of funding sources and transactions, and there really hasn't been an ability to have multiple credentials on the same card. Now, Flex Credential is very interesting in that it's a pointer. So, when you're issued a card, you're effectively issued this thing called a BIN, which is set up in the network. BINs are actually really interesting. They're issued by banks, but licensed from the networks. So if you want to issue a Visa BIN, right, starting with a 4, that is from Visa. But historically, you've only ever had a single BIN associated with a card or, your Apple Pay wallet. In this case, what's happening is, as an issuer, I can have a credential that points to other credentials. So what does that mean? It means that at least at the time of transaction, a customer, or at least this is the idea, a customer can select, hey, when I tap this phone, I actually want to use my debit card and not the credit card, maybe from the same issuer. And so you begin to have some control. You've at least gone from multiple cards to a single card. Now, we haven't yet reached the point where the authorization can be on one BIN and the settlement is on a different BIN.
Right.
I think this is the first step to that process. If you look at something like the Affirm card, the Affirm card is very interesting because there you're authorizing a transaction, and then Affirm, and it's typed. I believe when that transaction happens, it's a debit transaction. But then the customer has the opportunity to have that be funded by their DDA, by their checking account, or they can turn it into a loan. But a lot of that is managed on the back end by Affirm. I think this is the first step where the networks can offer that kind of functionality to the ecosystem. This announcement, I don't believe, is that fulsome. I think this is just at the point of sale, I'm selecting debit or credit. But I think it opens up the door. With networks, you want to think in a sort of like a decade. Like in a decade from now, can we have software select the payment instrument, for me, as opposed to me trying to make these selections? And then maybe can I change my funding source after the transaction?
Well, I think that's a really good way to think about it. And I appreciate you adding that nuance, because the thing that I was struggling with this one, it's so interesting. And I saw that Max at Affirm and a few other folks kind of chimed in about after the announcement was out, like, yeah, we've already kind of been working with Visa on this. This might be kind of the future framework that we build on when we're building things like the Affirm debit card or partnering with other providers in the ecosystem to offer something similar. So in the short term, to your point, Visa's intention here seems to be, we want to enable issuers to have more flexibility to tie different accounts or different payment credentials to a specific credential that's used at the point of sale. And so you can enable debit plus buy now, pay later, or debit plus credit, depending on, rules set by the consumer in terms of where they want to use debit versus credit, or a rule based on, I only want to use my credit card up to this point, and then anything else should go back to debit, or whatever the criteria are that drive that. And I think that by itself is really powerful, right? Like another example I've seen kicked around on Twitter that I think is pretty interesting is being able to tie like tax advantaged accounts into debit cards, such that like if you're have an HSA and you want to be able to have qualified spending on your HSA so that you're not leaving money there accidentally, you can have a credential that says, hey, anytime I shop here or buy this, it's going to draw from my HSA account. Otherwise, it's going to come off of my debit card, but that is programmatically driven at the point of sale. So to me, just like that, really interesting. Longer term, though, to your point, and I'd be curious to get your take on like what this looks like, you could see moving to a authorization crossing over multiple bins, and this working more at a network level than at an issuer level. And I don't think the intention is for that to be true right now, but I could see a huge amount of value to consumers in being able, and potentially merchants, in being able to have wallets or whatever sort of abstraction layer you want to think about, being able to direct payments across credentials of different issuers. So like, how do you think about the short term versus the long term here?
Yeah, so let's focus on the short term, which is what was announced. And actually, Simon Khalaf had a great comment on this Twitter thread around this is now the sort of standard around which others can innovate. You think about we used to type 196.83 to 121.5 into our browsers.
Right.
Now we just type, Fintech takes and, magically
hopefully
we see,
you get there. Yeah.
Yes, and magically we see all of Alex's great content. This is a little bit like that, where you've got this pointer that's being created by the network, and now it can allow a lot of innovation behind the scenes. So, it's not like the network is going to have this cascading logic of when I tap for fuel, I'm going to tap for my rewards card. When I go to these pharmacies, I'm going to use my HSA card. When I'm shopping at Amazon, I'm going to use my, Amazon credential. And so you can now have a lot of innovation that is happening by, merchants, issuers, fintech companies, et cetera. Right now, my understanding is that the Flex credential is really by issuer. So I'm not sure we can get cross issuers. That would be the next logical step, is that me as a software company, can you imagine if Apple were able to issue a credential?
Oh, yeah.
And then allow software to link the other credentials? Well, that would certainly be, a whole new paradigm. I don't know that is going to happen. And I think you might get resistance from the issuers who are saying, well, listen, that's my relationship.
For sure.
So unlikely to happen, but that is technically capable. But certainly within an issuer, if you're a large issuer, you think about the number of relationships we all have, with Chase. Here in Silicon Valley, we've all become Chase customers in the last
whether you wanted to be or not. That's right. Yep.
In the last year. So they now have my debit card, my First Republic mortgage, et cetera. All these things are now with Chase. So they're a big enough issuer. Maybe they have the footprint to be able to, give me some of this functionality. So I would say it's very exciting because it's rare that we change the underlying structure of the network, but it's also very early. So it's fun to speculate. And then I think you have real applications and real use in terms of what the firm is doing.
Yeah.
What this bank in Japan has done, which was the very first time that Visa enabled this functionality. It was a brand called Olive. And within the bank, you can use multiple of their products on a single credential. So, let's see what happens. The thing that I think is interesting is going back to the networks as an authorization layer and maybe tying into the account-to-account, announcement.
Yeah.
A credential should just be a way to authorize a transaction.
Right.
And in future, there's no reason why I can't tap a device that's a credential and behind the scenes, sure, that's linked to my debit card or my credit card, but why couldn't that also be linked to an RTP transaction?
Right.
A bank-to-bank transaction. And so, one of the reasons why I think account-to-account bank, pay by bank hasn't taken off, one is the convenience is not there. There's no tap-to-pay infrastructure.
Right.
You don't have a lot of the rules around this. I mean, I know merchants love irreversible transactions. I hate those as a customer.
Right.
I want to be able to tap and leave and know that if there's a problem, there's a dispute mechanism. So think of a credential as sitting on top of those rails. And in a future state, I'm not saying this is going to happen immediately, but I could see having my bank details available in an app and for certain taps being perfectly comfortable with that bank-to-bank rail, knowing that I'm getting some guarantee from the network. Maybe it's the same as my debit card. Maybe it's different. That's up for the network to decide and all those participants to decide.
Yeah.
And I mean, think about, what if you wanted to pay for your car, right? You finally go, you're buying a used car and it's $12,000. Today you have to go get a
cashier's check.
A cashier's check. Why can't I say, I'm going to set this up, right, for this one transaction and go and tap with the full certainty that transaction is going to, is in my control. There are these transactions that should be facilitated, I think, by network rails under a different set of rules. And so I think this is the beginning of that. And it sort of reminds me that transactions and interchange isn't this fixed thing. So one thing I've been looking at recently is how Built Rewards has entered the residential rental market. There's $700 billion a year of residential rental payments in the US. Almost none of that is on cards.
Right.
And they've done a bunch of different things. But one thing that they've done is that the MCC code for rental on their issued card with Wells Fargo, is not being charged this, 2.5%, 3%, because that's hard to make that work. So you can have variable interchange for different types of transactions. So if you combine a credential that wraps maybe a bank-to-bank payment with a flexible interchange table, which is already there,
Sure.
you can see some new transactions that wouldn't have been on the card rails now happen on card rails. And so I think that's a pretty positive, long-term view. Like think a decade, ahead. I think it's one of the reasons why the networks and Visa are looking at bank-to-bank is, well, how can they, wrap their rules and infrastructure around a bank-to-bank payment? And today, I think that's one of the missing things that makes it difficult to expand bank-to-bank payments, to where it could go.
Yeah, well, I wanted to talk about bank to bank because I think to your point, it's interesting, right? There's sort of a cynical read and a more sort of positive or optimistic read. And like the cynical part is, bank to bank payment infrastructure, open banking, the ability for consumers to more easily link these things together, the sort of emergence of e-commerce and the sophistication of e-commerce merchants to seek out lower cost payment rails. There's a rising tide on that side that puts pressure on incumbents, banks and the networks to be able to respond to that and say, oh, no, we're just, we're a network. We're just kind of to your earlier point, we're authorization, right? And like, that's what we do. And we're sort of agnostic to the underlying mechanisms to a degree. And the pressure that's sort of put on them to think more creatively about how their network can provide value, I think that's really important competition. But to your point, the thing that I think is the more kind of optimistic read and how I've always thought about the role that like Visa and MasterCard play in the ecosystem is pay by bank. Like if I think about how I as a consumer would want to interact with pay by bank, I don't want it to work like Zelle at all. Like I like it can't be a Zelle like, hey, this money moves instantly. If you authorize it, it's over. And we were going to take almost no responsibility around this. Like it cannot work that way on a broader scale for consumer-based payments. That's just like not going to work. Obviously, we've seen regulators and consumer advocates and a number of different folks already pushing back just for like P2P transactions around Zelle. Imagine that, but being like 1,000 times worse. Like pay by bank cannot function that way. And so if you think about what's missing, and this ties into, I think, a lot of the announcements that Visa made and some of the work we've seen from networks and issuers around pay by bank is how can we bring that value proposition around authorization? And, people don't think about Visa and MasterCard this way, but like a lot of it is just we have a complex set of rules that govern every potential use case and edge case around things that might go wrong. And regardless of what happens, we can govern exactly how this is going to work. We have a whole set of rules and monitoring and other things in place to make sure that this is going to be safe for consumers at the end of the day. And that's what drives adoption. And so, when I was thinking about, I think Visa made an announcement around like fraud and fraud detection, specifically around pay by bank and that being a part of this and leveraging all the expertise they have around being able to identify in real time fraudulent transactions and being able to score those and give sort of the authorizing parties a heads up on those. Just feels like a lot of the value that they're going to bring to pay by bank, which obviously was also accelerated by their acquisition of Tink in Europe, who they're now bringing to the US. A lot of that is going to be more on kind of network safety, fraud. And then to your point, I hadn't really thought about it this way, the credential piece and making it easy for consumers to interact with this stuff without having to type in their username and password or even necessarily to link their account using username or password. So I think that stuff is going to be really powerful in bringing infrastructure that's missing to pay by bank.
Yeah, this has always been the challenge of like, what problem is pay by bank solving?
Solving a merchant problem, but not necessarily a consumer problem, right?
And that's fair, but then I think merchants maybe the best pay by bank, solution today is the Target Red card that really is using card infrastructure, but is drawing funds from my account. But it has the things that a customer wants. It has the convenience of tap. It has a rule system around it. They also have significant rewards. So,
Yep.
There's an incentive there. So, I think any consumer payment mechanism is going to have those elements and value to each party. I'm sure you listened to the really fun Acquired podcast a few months ago about Visa and
I
just
did.
kind of how those incentives kind of came together and sort of some of the miracles that D Hawk was able to pull off, including kind of, appealing to people's, higher values and putting this network together with his little meeting in Sausalito and his cufflinks. But that's what's required to put together a payment network. So look, I think let's take a 5-year view. The next 5 years of Pay by Bank will probably be continued experiments and pressure from merchants to try to convert customers over.
Yeah.
And look, on utilities, if I don't pay by bank, I have to pay significantly more.
Right. Or Uber is giving me an incentive to link my bank account, but then after I do that and get the reward, I never think about it because payments are invisible and who really cares?
Yeah, that's right. Until maybe you have a problem, and then someone's going to say, okay, well, hang on, that wasn't me, or
right.
I want to dispute this. And so now there is going to have to be some infrastructure to manage that. So at least for retail payments, there will need to be a set of rules, which is exactly what a network is. In fact, in Europe, the regulators treat the scheme different than processing. So Visa and MasterCard in Europe
right.
Are literally different entities. And the scheme is the set of rules and agreements between the issuing banks and the merchant banks. And the processing is just kind of the system that kind of manages the actual transaction.
One is regulated more as a utility in some ways, right? In Europe, at least.
Yeah, they have all sorts of regulation. Much of it I don't think we should import here.
But those two things being separate kind of helps you think about the different values, right?
Exactly. So think of a scheme, the rules, the chargebacks, the interfaces between the consumer and the point of sale. Think of all of that as the scheme.
Right.
And the network being some bank-to-bank transaction. So,
right.
But right now, the current product works just fine. Like as a customer, I'm like, I have something called a debit card. It takes money out of my account.
Right. It all works.
I can see it. It's already plugged in. I don't see the value of this. So I think success in payments is about expanding the pie. It's kind of probably one of the best ways to think about how does payments grow is less about, versus something, but in addition to.
Right.
So there's $700 billion of rental payments. Okay. That might be something that if the bank-to-bank system, was better, a check isn't the best way, to do that.
Right.
And so what does a scheme on top of rental payments look like? Now, Build has just done it on the card networks, which is great.
Yeah.
But there may be other ways to kind of think about that. Probably the biggest one is to think through is, business payments. I think this is, today, if you think about the frustrations that people have with payments, like try to do an ACH and do it on a weekend. And these are large sums of money. Sometimes I need to know when it's going to arrive. Like that whole infrastructure should get better. It has gotten better with RTP. It'll get better with FedNow. And so maybe there's that's probably the areas where I would think you would start to get traction. But I think we're going to have 5 years of experiments to kind of see how these rules play out. And I would say, Zelle and Venmo and others are also experiments of just what are the problems when you have instant payments and who handles the fraud. And slowly rules emerge, which start to look like a scheme. So let's see what happens. In terms of the announcement for coming to the US, sort of TBD, because bank-to-bank infrastructure is about having a network of interconnected banks. Right now, Tink is in Europe, and so they have to come and, bring that infrastructure to the US and sign on banks. It's probably easier to do that now. Banks now know how to do this with multiple partners. So,
we're headed into a 1033 world where theoretically it'll be a little easier to catch up on that front.
I think so. So this could be a case where the fast follower, think of how much work Plaid had to do to get to this point. They would do it when banks were, pretty much, block them out. They had
set against it. Yeah.
They had to scrape, screens. Then they had APIs. So it is going to be easier for the later entrants. But of course, they have to overcome the adoption. Right now, there's an ecosystem of at least fintech companies that use Plaid, Finicity, MX, which has to develop for something like Tink.
Kind of building on this, two other things I want to touch on real fast from the list of announcements. One is Passkeys. And my reading of the Passkeys portion of this, and add a lot of detail to this because I haven't dug in a tremendous amount here, but at a very, very high level, the idea is to be able to bind certain forms of identity or other data such that you can make some of these processes a little bit easier, right? So one of the things that I think Visa specifically talked about in their announcement was tying passkeys to click to pay to make sort of online payments even more sort of seamless and easy. And doing this and this is the part that I'm fascinated by, doing it at a different level in the stack, right? So the thing I've been really curious about, and identity is its own whole ball of wax that has a lot of other things attached to it. But one of the things I've been very curious about is which layer of the stack ends up sort of adding the most value to identity and digital identity. And I think for a lot of folks who think about this, they look somewhere like at Apple and think, okay, well, if you're the one who owns the device and the operating system on the device, your ability to connect biometrics to transactions that happen on the device, like you have an obvious in there. We know that Apple and Google and others are sort of building in that space. Visa with Passkeys seems to be trying to sort of make a play for some of that activity to be happening perhaps at a network level. So can you walk us through like Passkeys, how that works, and kind of what the theory is there?
Yeah, so I agree. Very interesting announcement. And there's multiple things kind of happening at the same time here. Let's start with the passkeys integrated into click to pay. So First of all, what is a passkey? A passkey is just a private public key pair. It means that, and we've all kind of seen this, maybe they've been emerging on 1Password and my browser, but effectively, if I'm authenticated on a device, my Chrome browser, my phone, my banking app, and the entity on the other side knows that, hey, this is Alex and he's logged in, then we can create a key on that device. And that means, and we can link it to your biometric. And that means that when you are in some other context, provided your biometric matches, we can say, oh, the person whose face we just scanned was the same person that we trusted, on this device when he or she set up this credential.
Right.
And so you can access the funds, you can make a payment, you can access your email, etc.
I'm not having to re-authenticate myself as that individual by sharing all that information I shared before.
Correct. So think about it as like a one-time cost that you have, and then your subsequent, authorizations of a transaction is just, okay, this is my face. And actually, there's an open standard here called FIDO. It's called Fast Identity Online. And lots of companies use it. When you see passkeys in your browser or 1Password, they're using the standard. And what Visa announced is they have now created their own FIDO server. And that's a piece of infrastructure that you'll need. So hang on to that.
Yep.
The next step is when issuers, choose to issue a Visa or MasterCard, there's a certain set of obligations that they have in order to issue that card. It's got to be a certain size, logo's got to be in a certain place, et cetera, et cetera. One of the new requirements is going to be to set up passkeys at the issuer. And this may vary by region. And so, that's a very kind of general statement. But to get issuers to link someone's biometrics to their app, to their device. And when that happens, Visa is part of that transaction. And they have this passkey service that you can use to leverage that authentication. So one of the things that's different about, Click to Pay, and Click to Pay has this history of being, Visa checkout and was it, MasterPass? I forgot the name. In fact, one of the things that fintech takes should do is you should graph the number of payment options by year. And let's see where we had peak NASCAR checkout. And we're not too far off there. We have Shop Pay, PayPal, Apple Pay, etc. But Click to Pay is the networks, in this case, Visa and MasterCard and some of the other networks, trying to create an infrastructure where users can leverage the authentication that they set up at the issuer. So one big lever that the networks have is when you issue a credential, a Visa or MasterCard, there are certain specifications around that credential. It has to be a certain size. The logo has to be in a certain place. One of those requirements will be for the issuer to set up passkeys on the device. I don't know exactly how this will be rolled out, if it'll be rolled out in every region in the same way. But if that becomes a mandate, now what you have is when every card is issued, the customer goes through that one-time process of setting up a passkey on their device. And in this case, the Visa passkey infrastructure, the FIDO server, is involved in that authentication. Now, when you go to a merchant who was using Click to Pay and the Visa passkey service, the biometric that was linked by the issuer can be used in the checkout process.
Aha. So the way to think about it then would be that the Click to Pay, which is that kind of front-end infrastructure that Visa and MasterCard and others are trying to get integrated into as many checkout pages as possible, that then carries with it this passkey and this biometric that's set up when the issuer is issuing the credential, which then makes that transaction and all of the sort of checks you have to do to make sure I'm Alex Johnson and I'm, logging into my Click to Pay capability here. That just makes all that much more streamlined. Is that the sort of end impact?
That's the goal. And there'll probably be many different implementations, between how the issuers kind of set up that passkey initially, the consumer and the issuer. But let's for a moment, as I guess we get to be commentators here. So let's just be commentators here.
Yes.
And assume that is kind of how this ideal system, would work. You've got billions of credentials that are being authenticated and set up by the issuers, maybe under a mandate, meaning like I can't use my card unless I have this passkey set up.
Sure.
And then you have this Click to Pay infrastructure, which the merchants still have to opt into.
Yeah. Right.
So the one lever that the networks have, and they haven't pulled this lever, but if they did, it would be pretty interesting, would be to enable liability shift for the merchant if the consumer uses biometric-enabled passkeys. And so what does that mean? That means that there is no more merchant fraud if I use the Click to Pay infrastructure. Now, they haven't done that, and I'm not sure if they will, but that is a lever that you could pull.
Yeah.
And then you would have significant adoption. You've got adoption on the setup side with the issuers, and you would have potentially adoption on the merchant side. Even without that, I think there's probably, a lot of value. And so, let's see how that plays out. Merchants will need help in doing that. Actually, I mentioned one of the reasons why I follow this closely is that VGS, we basically play that role, for merchants. So we have 350 customers today, and a lot of them use the VGS Vault for payment tokenization. And if they want to use Click to Pay, they would rely on a company like VGS. I'm sure there'll be other enablers who can enable that infrastructure so that those passkeys that were set up with the issuer and linked to biometric can now be used in a checkout. So let's see if this iteration works. The beauty of this network model is it can take a long time to get something right. So maybe this version works well. It's going to start in Europe. It's one actually really important point. In Europe, because of the PSD2 mandates, you have to have, authenticated transactions.
Yep.
And so, today that's happening through 3D Secure. And as Americans, we're just like, what is this thing? Bank wants to talk to me in the transaction.
Right. Yeah.
And that is kind of annoying. But imagine if that was just a Face ID scan at the merchant side. You didn't really leave that infrastructure. I think that starts to look a lot more interesting. So that was the other announcement. Maybe the last one, I know we're kind of running out of time here, is data tokens.
I wanted to ask you about this. Yeah, so give us the 3 minutes on data tokens, because I'm excited about this one.
Well, they didn't provide much detail. So we're in speculation mode. But my understanding is that this is an opportunity for a customer to opt in and provide information from the issuer back to the merchant. One of the big frustrations that merchants have, and this is something that I think would help everyone, is when you tap that card it's really hard to know who is this person,
Right.
right? Like online, I've been tracking Alex Johnson
You know
across 8
everything
different
about me.
websites. I
Yeah,
know he
yeah.
wants that sweater. Like, there's a lot that I can do. And then Alex walks into, a store. And even if he's like a previous customer, like unless he's linked to some program. So this is an opportunity for customers to opt in and say, maybe this is my email address. All right. So anything can flow over that data token with opt-in from the customer. And traditionally, banks have resisted this. They've said, hey, that's my customer. That's Alex. Like, why would I share that? I mean, banks and merchants don't share,
Yeah, yeah.
which is why my actual transaction at Amazon is not shared with my issuer, just that I bought X.
Right.
And so, but this is an opportunity for that sharing, to happen. So let's see how it's used. I could see it be like one scenario, again, just speculating, is you kind of tap your card, the point of sale says, do you want to share your email address? Click. Done. I'm opting in. The email address from my issuer is sent to the merchant. I'm part of a program. Man, that's so much better than like typing my email address on the Clover terminal while I wait for someone's behind me and like I always get it wrong and
Right.
just to get my receipt. Right.
Right.
So think about the things that can start to happen if we enable that. And because it's consumer opt-in, and you think about kind of 1033, like that overrides even a bank's resistance. If I am saying that I would like to give this email address,
Yep.
or I want to give my demographic profile to a merchant, like as long as I am in charge and there's awareness and consent, I'm not sure that there is anything the issuer can do to stop that. And I mean, I personally think it probably has value to the issuer as well. But
Sure.
I could see issuers just saying, well, I'm going to charge you per data. I mean, or something. But they can't do that with 1033. So there we kind of wrapped it all up, bringing it back to full circle.
That is very, very, I mean, just to comment on that one really quickly, that one is super interesting to me because I do think that, to your point, like the problem with the tracking Alex Johnson across all the different apps and stuff is that we've had this sort of disappearance or cracking down on third-party data sharing, right? And so it's much harder for merchants to be able to get insights into what I'm doing across multiple different apps and websites, which is why companies have started launching first-party data advertising networks. Like Chase is launching Chase Media Solutions that allows for merchants to target consumers across the Chase ecosystem. This is really interesting because it makes the payment credential, which has nothing to do with any of the other cookies or things that are happening on the browser. It allows the payment credential to become a data credential that allows for the consumer to share other things about themselves using that mechanism that sits outside of those things that have started to get restricted. So it is really interesting. I think it's super smart on Visa's perspective to make it all consumer driven and consumer opt-in. Like I have a theory, which is that if you build some kind of data product and it doesn't have consumer permissioning built into it, even if 1033 and associated things don't cover you today, you're on the clock for how long that model is going to work before the CFPB and others get to you. So making it consumer permission from the start makes a ton of sense. And I'm glad we ended on that one. That's an intriguing one to kind of think broadly about.
Yeah, I mean, you may or may not know this, but when TrialPay was acquired by Visa, we created something called the Visa Commerce Network. And the whole point of the Visa Commerce Network was to give value back to the merchants. And we did it in a very effective way, but it's hard to scale this across the 100 million merchants that operate on the Visa network. We were embedded into apps like Uber.
Right.
So you might find this interesting. At the time, there were about 50 million Visa cards on file at Uber. And we just did a calculation to say, well, how much do those 50 million cards spend within 3 hours of exiting an Uber annually? So you imagine there's 50 million people or so. They get out of an Uber. They have 3 hours. Well, how much do they spend? Well, they spend about $256 billion in the local neighborhood. And so we went with this value proposition to Uber to say, what if we got consumer opt-in to look at the transactions that those customers had made in the last 6 months and get a value proposition to these merchants that, you are effectively delivering $250 billion of commerce by moving Alex from his home to his office. So what happened was we would go to Starbucks and say, Alex is a coffee drinker. We can see he drinks coffee. He just hasn't visited your store in 6 months. Starbucks, would you like to offer Alex something? And the reward was Uber credit. It was always difficult to find the right reward mechanism. So within Uber,
sure. Yeah.
we knew who you were. You opted in. We had a value proposition tailored to you. And we had a merchant who said, I will gladly give Alex $5 in Uber credit. And the best part is you just used the Visa credential that was already in your Uber, wallet. You just said, this is the card I'm going to use. You pay full price at Starbucks and immediately get a $5 incentive. And then maybe Terry is a Starbucks customer. And so maybe they give me, some loyalty incentive or zero. So we were sort of doing this very manual version of the data token in that we're saying, here's Alex. He's a coffee drinker, but not at Starbucks. Do something for him. Think about what an issuer could do if they had that value proposition embedded into the data token. Then a merchant would say, gosh, I want to reward Alex because, he should be coming back in. Now, what's missing is the mechanism to communicate that. Is it the banking app? In this case, we use the Uber app.
Right.
Is it the point of sale? But that's the beauty of these network models is you enable some functionality.
Yeah.
And then people innovate around it. So,
right.
Maybe we'll kind of end on that, which is like the amazing power of these networks is you set the standard. And we started with Flex Credential. I'm just like, I think of the 16 digits. I think I called it like 16D. This is a very important number that is a standard that literally, 100 million merchants understand. When I give you this number, they know how to interact with the consumer in a standardized way. And then you just have all this innovation around it that I don't have to care about. Like, I don't care how Max Levchin's firm is funding the transaction. I just know you gave me a credential. Visa said it was good. I'm done. And so when you standardize around credentials, tokens, you have tons of innovation. So I like this as a decade-long play on, what's going to happen. And maybe we can come back and talk about that in 10 years when we're a little bit older and a bit wiser.
Well, we'll definitely do that. Terry, if you're game, I'll have you back well before that 10-year period is up because I always enjoy talking to you. Thank you for carving out some time. This was a super fun conversation.
It's a pleasure. Great to see you, Alex.
You too.
Thank you for listening to this episode of Fintech Takes. Stay up to date with emerging companies and the latest fintech trends by subscribing wherever you get your podcasts. And if you love Fintech Takes, please tell a friend.